Welcome to Informed Investor. Imagine owning a piece of gold but without the hassle of storage, purity concerns or making charges. Imagine taking exposure to gold in a tax efficient way and also earning a guaranteed interest over and above the appreciation of gold. Well, that's where sovereign gold bonds come into the picture, offering a unique investment opportunity. And guess what? The next tranche of sovereign gold bonds opens for subscription today. In context, SGBs are government securities denominated in grams of gold and are issued by the RBI on behalf of the Government of India. You pay the issue price in cash and receive bonds that mature in 8 years with an exit option after 5 years. Here's the bonus. You earn a fixed interest of 2.5% per annum paid semi-annually on top of any potential gold price appreciation. So back to the story, the Reserve Bank of India is issuing the Sovereign Gold Bond Scheme 2023-2024 Series 4 and will be open for subscription today until the 16th of February. The minimum bidding quantity would be 1 gram and a maximum of 4 kgs for an individual and 20 kgs for trusts and similar businesses. Having a 999 purity of gold, it will be issued at Rs 6,263 for investors with an additional 50 rupees discount will be provided for investors routing their investment through the digital mode. The sovereign gold bonds will be sold through various channels including scheduled commercial banks, post offices, stock exchange through several brokers participating. While there are other investment options in gold which are physical gold, gold exchange traded funds, digital gold and gold mutual funds, SGBs have been attractive for investors for the following reasons. Backed by the Government of India, SGBs offer unparalleled security and peace of mind. SGBs eliminate storage costs, theft risks and purity concerns associated with physical gold. Apart from the potential gold price appreciation, investors are also entitled for a fixed interest of 2.5% per annum, which is paid semi-annually. SGB investors enjoy indexation benefit on maturity and exemption from capital gain tax if held until maturity. SGBs can be exited after 5 years on the secondary market or can be redeemed on maturity. The only drawback is that each issuance of SGB comes with a 5-year lock-in period which may not align well with short-term goals. Now you might wonder how the returns been. So far, the Reserve Bank of India has issued 61 tranches of SGB so far, with this one being the 62nd one. The second tranche of SGBs issued back in the year 2015-16 recently matured last week, with Rs 6,271 being the final redemption amount. So technically, investors who participated in this tranche witnessed massive returns of 141% return so far, making it a CAGR returns of 11.63%. Considering the redemption price to calculate the return so far, let's check how the other tranches fared. Tranches up to fiscal year 18 delivered total returns of triple digits. However, with the volatility in gold prices over the last few years, SGBs have delivered negative returns for the last 3 tranches issued in fiscal year 23. Before we conclude, did you know gold investment also have tax implications? According to the provisions of the Income Tax Act, gold is considered a capital asset, and when you sell it, it becomes subject to capital gain tax. Capital assets in general are taxed according to the holding period. So in context, if you buy gold and sell it within 36 months or 3 years, it is considered as short-term capital gains. If gold investments are sold after a holding period of 36 months or 3 years, it is considered as long-term capital gains. Coming to the taxation part, long-term capital gains are taxed at 20% plus 4%, making the effective rate 20.8% with the indexation benefit. Indexation allows you to adjust the investment's purchase price after accounting for inflation, effectively reducing the tax outgo. While on the other hand, gold investments sold within 36 months is added to one's taxable income and taxed according to the applicable income tax slab. For SGBs, the taxation is a little different. The interest element received from SGBs is entirely taxable as per the tax slab. If held until maturity, which is 8 years, the capital gains are completely exempt from taxation, whereas if sold before the maturity period of 8 years, it will be taxable as per the above definitions of short-term and long-term capital gains. To conclude, investing in gold offers a valuable hedge against inflation and economic uncertainty. With the convenient and secure options of SGBs combined with the other diverse range of other gold investments, there's a perfect fit for every investor's need and risk tolerance. So do your research, understand your financial goals, embrace the golden opportunity to diversify your portfolio and be an informed investor. Having said that, this is me, Ralasan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com